We got to talk about oil because that is a huge part of what's going to happen in the coming year. Keith Schaefer with us right now, editor, publisher of Oil and Gas Investments Bulletin. Keith, thanks for being with us. You know what? Every day we hear some new news from Iran. The saber rattling has not stopped. Nuclear weapons abound. Where are we?
Right now we're exactly where I thought. That is, the market is actually taking a lot of this new information in stride. The price of oil really hasn't gone up that much. We're looking at about a $10, $15 premium over normal right now, and I really believe the market doesn't think anything special, anything really negative is going to happen. It's not pricing in any major catastrophe right now.
You don't worry about war?
I don't worry about war. Economics will trump war all the time. War doesn't make anybody any real money. So I see the chances of the Strait of Hormuz being blocked as being almost zero, truly. And I think the market agrees with me. That's what the price of oil is saying right now. There's a small risk premium, but not very much.
So, okay, so you're saying that this is all much ado about nothing? And that the price of oil is really much more, is moving much more, say, on growth, global growth, as opposed to the nutters coming out of Iran?
In the short term, I think Iran's definitely putting a bit of a bid under oil, maybe $5, $10, even $15. But for the most part, oil is truly trading on market demand, which is very tight right now. There's only about 2.5 million barrels of spare supply in the world. If that's down from a little over 3.5 million last year. So that's really what's driving oil, not so much what's going on in Iran. The day-to-day movements you see in the price of oil, the hour-to-hour movements, yes, that's going to be whatever politician is saber-rattling. But longer term, both the crude futures curve and the market is telling us this is not going to end really badly for anybody.
So where do you see oil going then in 2012?
I think it's going to be pretty flat. I think you're going to see oil actually start to decline a little bit. Despite the low spare capacity, there's actually a lot of oil flowing, and the political premium that we have here is going to continue through here. But $100, $110 is where the world wants to see oil. Everybody makes money. It's not crippling for the West. It makes great money for the East, and I think that's a very happy Goldilocks price that we'll see continue. You're going to see some gyrations, but not a lot.
Well, that's good to hear, actually. I got to ask you about natural gas, too, because that's sort of been on fire as well.
Natural gas has been firing because the price is burned down. Again, in the States here, we have a huge supply glut, and that is going to continue at least for another year, if not more. The bulls are saying at some point in time, these shale wells are going to decline so hard, so fast, that it'll take the market by surprise, and the amount of gas that we think is there really isn't there. But I think that we're still at least a year to 2, maybe even 3 years away from that, simply because the new big shale deposits that are coming on, like the Marcellus in New York State, those big shale deposits have a lot of running room left before they hit peak production. So I think we're still a couple years away before the bulls are going to be able to claim any big victory there.
Do you worry at all, as far as, if this is what you follow, oil and gas, do you worry every time you hear something come out of the White House about alternative fuels, alternative energy sources? Does that have any kind of effect on the way you trade this market?
Never. No. The alternative energy sources don't scare me at all. What I think is really good news for the United States is that the low gas price has brought a lot of petrochemical industry back onto the continent, and you're going to see that improve. Plus, you're starting to see now the big oil companies have been buying the gas companies, so that means that the big dogs in the market are incentivized to see a larger demand for natural gas take place. That is going to be the fuel of the future, not wind, solar, or any other alternative energy.